Now, one of our top stories, the Indian market regulator SEBI has barred US trading firm Jane Street from trading in the country's derivatives market. This comes after investors' alleged manipulation by the quant firm. SEBI has also asked Jane Street to redeposit over $500,000 that Jane Street unlawfully gained from the Indian markets. Jane Street reportedly generated over $2.3 billion in revenue from India last year. The US company is disputing the claims made by the regulator. In a statement to CNBC, it said it will engage with SEBI and reiterated its commitment to operate in compliance with the regulations. I spoke to the chairman of SEBI, Tuin Kantapandi, in May. Here's what he told me about the crackdown on the futures and options market.
We had an excessive retail activity on some of the products like index options only on the expiry day. The rest of the future and options are in any case going on. And
Understood.
On the index options weekly expiry day, we had an exuberant activity on the expiry day, which was creating some distortions.
So you were concerned that excessive speculation by retail investors in these parts of the derivatives markets could lead potentially to a market effect?
I mean, to that extent that, they have been losing money, and which is our study report pointed out over the last few years. So we are also cautioning.
CNBC TV 18's Hormaz Fatakia joins us from Mumbai now to tell us more. Just how significant is this action by SEBI against Jane Street, Hormaz?
Pretty significant indeed, and this order, the interim order, was published on the SEBI website last evening, where they have barred Jane Street and its related entities from accessing the securities market, and these unlawful gains worth over $500,000 will be impounded, and these $500,000 is the largest sum that has been impounded in Indian capital market history. And since this is an interim order, this amount will be deposited in an escrow account where no debits will be allowed until prior permission from the regulator. Now, this issue goes back to last year, where the market regulator had asked the exchange, the National Stock Exchange, to probe any form of manipulative activity that Jane Street is conducting. The report was submitted in November of last year, and in December, SEBI had found that there were certain related entities that were running largest risks in cash equivalent terms in the F&O market, mostly on the expiry day. Now, cash equivalent terminology generally means liquid instruments that can be easily converted to cash and then used as collateral for trading purposes. Now, in February of this year, it was found prima facie that Jane Street was engaging in activities that were in violation of the SEBI regulations, and as a result of which the market regulator had asked NSE to issue a letter of caution to Jane Street, stating that to prevent them from taking any positions that could be manipulative in nature. However, in May of this year, it was discovered that Jane Street continues to be in disregard to the letter of caution sent by NSE, and as a result of which this order was issued. Now, over the last 2 years, starting January of 2023 till March of 2025, Jane Street has made a profit of over $4 billion trading in just the Indian derivatives market, and this comes at a time when 9 out of at least 10 retail traders lose money in this derivative market. So a significant step indeed. Interim order for now, but SEBI has barred Jane Street from accessing the capital markets.
Hormaz, so are there, or do you anticipate any immediate implications for the benchmark stock indices when they do open from a liquidity point of view? Is this, at first blush, something of a negative? Does this imply that the regulator is doing what it sets out to do and curb excess speculation? And what sort of messages does it send out to foreign investors?
There will be implications, yes. The capital market names that are listed on the exchanges will definitely see some reaction at the start of the trading session. But the message is plain and simple, right? You may want to trade in the Indian markets. You are very welcome to do so, but you have to do that within the law of the land and within the regulatory ambit that has been laid out for you. And SEBI has made this very clear that this excessive speculative activity that has been taking place in the F&O markets needs to be curbed. And there have been enough and more steps that have been taken by the regulator to curb these activities when it is coming down to reducing the number of expiry days in a week as well. So implications, yes. Sir Jane Street has mentioned that they would be engaging with the regulator because they dispute the findings of the order. So it'll be interesting to see what turn this issue ends up taking.
Well, that's great reporting. Thank you very much indeed for those insights. Let's switch gears and take a look at